Hello and welcome to ET Auto. Today is Tuesday and it's 3 p.m. and we bring to you the disruptors, innovators, strategists in the mobility business space. So on this episode, this is slightly different. We are not going to call any of the founders, but we are going to call the legacy business drivers or those people who are in the legacy automobile business or traditional automobile business, especially in the space which is under threat after electrification. That is the ICE engine and its parts manufacturers. So today's episode is about a company that is one of the leading provider of ICE engine for vehicles, and how are they trying to pivot and play in this transitioned, or you can say disrupted, world of mobility. And what are their bets? What are the bets they are taking to be part of the future revolution of mobility? How much accurate, how much right, how much wrong are they? That will be analyzed with the expert and the person who are leading the company from the front. Without much delay, let me tell you the company name that is going to participate at this startup Adda today, a station for innovation, is Greaves Cotton. We know Greaves Cotton is one of the leading ICE engine and parts manufacturers, and we are joined by expert today, that is Ashim Sharma. He is the group head of automotive logistics and manufacturing. So he will be giving his views on how the bet of Greaves and Cotton uh, been in terms of electric mobility. They are trying to beef up their stake in the electric mobility space. Before I invite Nagesh and Roy Kurian, who is the Chief Operating Officer of Ampere Electrics, and Nagesh Basavanhalli, who is the former MD and CEO of Fiat, and now he is the MD and CEO of Greaves Cotton. Um, Ashim, we have seen suddenly, a very, strong interest of Greaves Cotton in electric vehicle space. They acquired a company in electric two-wheeler that's called Ampere Electrics, and then they acquired another company in the electric vehicle space that's a three-wheeler manufacturer. And now recently they have rolled out first multi-brand electric vehicle, outlet in India, and they're also rolling out a business plan for electric finance. From a ICE engine, it looks like Greaves Cotton is going to have a lion's share of business from the electric mobility. How do you assess the acquisitions they have made? How do you see the plunge they have taken in the future mobility or electric mobility space? How wise it is? Will they be able to really overcome the fear of Kodak moment? We have seen how the things change with digital camera and everything coming up, and some people moved into this space. Some people did not realize the change was coming up. So, how do you see the steps taken by Greaves and Cottons?
Sure. Thank you. Thank you, Nabil, for having me on the show. And yeah, I think that's a very pertinent question looking at what Greaves Cotton has done from having a pure play ICE portfolio to now branching out into EVs. I think there are a couple of points to be seen on that. First and foremost, I think they have entered that segment of the market, which is probably the fastest growing segment and will also scale up the most in the country. So that is the two wheelers in the 50,000 to 1 lakh rupee range, as well as the three wheelers, wherein they're also looking at both cargo and passenger. So with the MLR Teja being one of their offerings at the moment. The third thing also to be seen is they've also got into e-rickshaws. So, that again, as you know, is accounting for bulk of the EV sales, at least in the three-wheeler segment as we see it, at least before the pandemic that was there. So from a product portfolio standpoint, I think they've entered those segments that are going to be the fastest growing, where a lot of action is happening right now. The second thing to be seen with this diversification also is that there are still that issue which many of the startups are grappling with, wherein you say, I can sell you the vehicle off the internet, but what about registration, road tax, insurance, all of that? So I think with their existing network and they being able to leverage that thing is also taken care of to some extent. And I think it's a very intelligent thing to look at multi-brand retail there, because initially the volumes are going to be lower, and to create the viability for the dealerships, if you are looking at a multi-brand setup, which hasn't unfortunately taken off in India for the ICE segment, but is prevalent all over the world otherwise. So that's, I think, another smart move from the company. Third, and very importantly, also on the service side, I think they are able to leverage some of their existing Greaves service network and doing that. So it's a twofold thing. One is that network also gets an additional revenue stream in the form of EVs now. And if you have a multi-brand retail, you would also try to link up the service of all the brands that you sell in that channel. So that way you also create viability for the existing channel and also create enough of a business case for its scale up. So I think they've struck all the right chords in those terms, in terms of where they're positioning themselves in the EV play as far as the overall portfolio is concerned, in terms of sales, also in terms of service. I, however, see there's one more very crucial element that we could hear more from Greaves once they join, is around the fact of charging. So, are they trying to set up something dedicated on that front as well? To some extent, yeah, we do understand that you could have home charging of some of their vehicles. Some of the vehicles also come with the carry home battery kind of arrangement. But nevertheless, I think charging network should also be something that would be on their radar for sure, in order to complete that overall canvas.
Just want to understand, we have seen of late, like whoever is trying to take a plunge in EV space, they try to do everything. Look at Sun Mobility, they are trying to be a complete solution provider. They are not just into charging or swapping now. They are going to collaborate with the other startups, other vehicle manufacturers, charging infrastructure provider, government bodies, and everybody, and they are trying
Right.
to be complete solution provider. Do you think it makes sense for companies like Greaves also? And do you think so much of focus suddenly towards electrification, is it justified? Because we do not have enough vehicles, electric vehicles on the road. We'll understand the actual feedback of the user only after these vehicles come on the road, be it on the life cycle, be it on the post aftermarket kind of situation, in
Right.
terms of the cost of ownership. All these aspects is still unknown, so many unknowns. But still, companies like Greaves Cotton, which is trying to put all its egg in one basket, that is of electrification. How do you see this?
Sure.
Because we
Let me
see the
first.
ICE engine,
Sure.
yeah, ICE engine is also not going to go so easily or so fast.
Right, right. So let me first answer the first part of your question around providing a complete solution, and then I'll come to this one as well. So I think as far as the complete solution goes, so that's something that's been quite prevalent even in case of any forms of commercial vehicles, right? So the user on the other end is not just looking for for a vehicle per se, but is looking for a business solution to be given to him or her. So from that perspective, I think when it comes to EVs, you need to suggest, okay, this is the kind of vehicle. Why this is the best vehicle? Because this is the range, this is the load carrying capacity, this is the way you can load it, unload it, and because it is an EV, this is the kind of charging solution that's going to be working best with your kind of business case. So I think that's something which was done in ICE vehicles also, minus the charging. But because EVs have this big thing around how you're going to charge them, so it makes sense for anybody trying to enter into the commercial vehicle space to offer a complete solution. So which is, how do I solve your business problem in a way that it's most profitable for you to be able to serve your end customer, if say you are a logistics provider. So I think from that perspective, business giving complete business solutions or complete solutions is going to be the way forward. The second thing which you're also talking about, people trying to do many things at the same time, sort of many segments, or having a larger portfolio. I think some of that is also stemming from the fact that you need to build the critical scale in EVs, which is not there if you just focus on one solo segment at the moment. So, in order to be able to build sort of a critical scale for your manufacturing setup, players are trying to do more than one segment at the same time. Right? Now
Thank.
coming to the yes, please.
Yeah, yeah. Go ahead. Then I'll call
Right.
up Nagesh.
Sure. Coming to the second part of your question, which is, are you putting all eggs in one basket? I don't think that's the case, at least with Greaves, because they have a very vibrant ICE business already, and sort of market leaders in several of those segments. I think I would call it more as a diversification plan, and this probably is also a natural diversification plan because what they also state is they are making several of the components in house, so they are utilizing their current competencies so as to be able to get a key position in the EV market. So I think that probably that in fact is the right strategy to go for, and they already have the ICE business which could keep funding a large part of the EV business as well. So I think both synergistically and strategically they are taking the right steps.
Thank you, Ashim. So you are justifying the multi pronged strategy of these traditional players when they want to debut in the electric vehicle space, especially to achieve those critical scale. That's very important. That's why they are trying to get into multi segments. Um, if you have any questions from the experts or the Ampere top management, you can simply put it in the comment box. We are joined by the group CEO, Greaves Cotton, which are one of the leading traditional engine manufacturers who have invested in the electric vehicles heavily. If you want to understand if why, what are the reasons they are investing in the electric vehicle, which are the startups they are looking at, or what is their strategy in terms of when shortlist their startups. So I would like to bring in here Nagesh, Group CEO, Greaves Cotton, and understand from him. Uh, it's been some time they acquired the first electric vehicle company. What was the really what was the backroom discussion that took place that led to this acquisition? And after that, we have seen another acquisition, and there's no stopping. You guys are trying to strengthen yourself in the EV mobility space. So can you give us a sense what triggered really Greaves Cotton to take into this space and take such a strong plunge?
Thank you. Thank you. Good afternoon, everybody. Nabil, thank you. Ashim, good afternoon.
Yeah. Good
Uh,
afternoon.
Thank you for having me and my colleague here today. It's great to be on this platform. Thank you so much. So, in terms of Greaves Cotton itself, right, let's take a step back. I think we were always in that last mile mobility business. We moved people and we moved cargo, right? And previously we were doing that through our traditional IC engines, which went into a lot of OEs, and we're very grateful for the business. 4 years ago, we saw this transition coming. Why did we see that coming? One, we knew there was going to be a disruption that was going to come. We also saw what had happened in other markets, whether it was the West or more prominently closer to home in the Chinese market, where I spent a significant amount of time before I got back to India, was the significant S curve or the ramp up, especially in the two-wheeler, right, in China. So putting two and two together, we said we want to be in the last mile mobility. We want to be in a fuel agnostic. And Abil, this also answers your question. We never said we will just be in electric. We said fuel agnostic, where we said we will be in the IC engine plus electric. And we also said, how do we leverage the ecosystem or the system effects? And what that meant was, today we have access to 12,000 mechanics, access to 7,000 retailers across the country who sell spares. The idea was, what was the customer pain point? The customer pain point was, can you provide uninterrupted journey to that end consumer, whether he is using it for personal mobility or B2B application, meaning fleet or commercial? And can you keep him going at the right value proposition, meaning at the right total cost of ownership? That was the fundamental assumption, Nabil. We always said, how can you keep people moving and cargo moving, do it at the right value proposition. We can do it either through diesel CNG or we can do it through electric. But clearly we knew that the future was going to be electric. And how do you now start playing in that? Last but not the least, thanks for recognizing. Yes, we've done about three acquisitions in the space over the last 2.5 years. And starting with the Ampere, which is the two-wheeler brand, ELE, ELE, which is the electric e-rickshaw brand, which gives lives and livelihoods to a lot of people in India. And then the third and the latest is the strategic stake in MLR, which gives us access to the L5 or the e-autos, right? So we believe the platforms, the localization, then we have announced the manufacturing capacity improvement is what it takes to get India people and cargo moving. Thank you.
So, Nagesh, just taking the cue from your answer, you talked about multi fuel. You are going to be fuel agnostic. It's not just going to be EV. You talked about ICE engine. We are talking about flex fuels. How do you see that? You have heard recently Mr. Nitin Gadkari talking about flexible fuel option coming into vehicles. So, how do you see that? Do you want to explore that area also? Quickly before we get into the next discussion. Yeah.
Sure, sure, sure. Yeah, so I believe, and you touched it at the beginning, this is a transition that will happen where IC engines will be around for a while. Clearly, the consumer preferences will change, and market by market, it will start determining. Electric will start going up. The inflection point is around the corner, thanks to the battery prices, thanks to the government incentives, thanks to the petrol prices going up, right? So that also is an exciting phase. So ours was a plus and plus strategy, point number one. Second thing, Nabil, is I am a firm believer for a country like India, CNG. There's a lot of infrastructure that's getting built. CNG, flex fuels, ethanol has been working in other parts of the world, maybe ethanol, and even LPG, CNG, LPG, depending on the type of applications, right? Could still be utilized. Again, it gets down to let's put ourselves in the mind of the consumer. The consumer has a total cost of ownership. Can we provide that value proposition, right? With access to fuel and the right value proposition at the right place, right? And keep him going in terms of providing spares and providing service. I think that's a thought process. So I believe the IC engine and the LPG, CNG, biofuels, but at least some of this will see live, will see continuance. It's not going to be a switch flipping, but clearly the future will move towards electric.
Nagesh, when you acquired your first company, Ampere Electric, I know the founders very well. How many company did you review, and why did you choose this company? What were the things that impressed you and your board members that you invested in this?
Yeah. So I think when you're right. I think the company was founded by two passionate founders, husband and wife, right? Who had come from overseas, set up the operations in India, wanted to bring in electric technology maybe ahead of the time. Right. So we are a late stage startup. If you recall, I mean, Ampere has been around for a while, right? And so thanks to them, they set the groundwork. They started working on the designs, right? Whether it is the motors or the controllers, right? And clearly the inflection point wasn't there, the volumes were not there. So obviously we all did what we had to do, right? In terms of keep the production going. Now, so we were very happy with what we saw in terms of where they were. Clearly, just like any startup, I think there were working capital issues and there were scaling up issues. There were manufacturing capacity expansion needs. So that's where we thought somebody like us coming in, right? And working with them. In fact, we're very glad the first couple of years we worked very closely with the founders, right? And together we took the journey forward, right? So I think I'm very grateful for the platform that the founders had set up.
So my question was, why did you choose this one? There were several startups, and what do you look for when you go on investing in a startup in the mobility ecosystem? You have acquired already three in just 2.5 years. I think one of the highest number of acquisitions that we have seen.
Yeah. Yeah. So absolutely. So when you look at it, right, we felt the basic groundwork was there, and we felt they were playing in the heart of the market. They were playing in that low speed plus high speed, what I call the belly of the market. So even today, the strategy is still the same. We play in the 35,000 rupees to that 80, 90,000 rupees, which I would call the belly of the market, right? When you look at the two-wheeler, right? And playing to that, what I call mobility segment, which is that affordable mobility segment, right? Was true to our DNA, right? When you look at Greaves was always about affordable mobility. Greaves was always about keep people moving, right? So that was one of the fundamental reasons. Secondly, was the passion of the founders and how they had set it up, right, from scratch, right? And third, we believe this was a very scalable model. So things, and since we are in the public domain, you have the numbers. But what was probably a 1.5 crore a month monthly MRR, right? In the last quarter, the announced results we've announced, we are greater than 30 plus crore monthly MRR, right? So it's multiple times in 2.5 years, like you say. And obviously, we're just getting started. The market is just beginning to kind of take off.
Generally, you are originally a parts supplier. OEMs are your customers, and you are becoming yourself an OEM with electrification. Did that not put some kind of thought that you will become a competitor of your customers? How did you solve that situation?
Good point. No, no, this definitely we take it very seriously. Like I said, uh, when you look at it, our B2B customers, and we are supplying everybody, most of the automakers in India, right? And we are very respectful and we are very glad. We were supplying them diesel engines. So we were very clear that when it comes to CNG or electric, right, that's the area we are going to play, right? So I think that's kind of where we were very clear. And we were also clear that this is the future and disruption was around the corner. We had to reinvent ourselves, right? And you touched upon it at the beginning of your speech. There is always that Kodak moment that all companies have at the back of their mind, right? So, how do you reinvent the company? And keep in mind, we have a legacy, we have a tradition here, 163 years of company, and the company has reinvented it over multiple times. So, this was our view of reinventing ourselves because at the end of the day, how do you keep reinventing ourselves in future relevant businesses and keep the company relevant for the next several decades, right? That was the thought process at the board level.
So going forward, how do you see this the breakup of business in the mid to long term? Your business as a supplier, engine manufacturer, engine part manufacturer, and as an OEM of electric vehicles or an electric mobility solution provider. That's what I'll call you because you have ventured into retailing. You are trying to finance electric vehicles. You are trying to manufacture multi-segment electric vehicles. So just want to understand how do you see the revenue breakup going forward, and what is going to be your focus in terms of ICE? Are you going to forget that now, or are you going to expand there as well?
Yeah. So, great question. And if you look at it, I'll just give you a contrast. 4 years ago, 70% of our revenue was coming in from a single customer, single fuel, single industry, which is automotive. Today, by design, we said we wanted to be around 40% plus, 40 to 45%. Today, by design, last quarter results, we are about less than 40% in automotive. What we've also did is in engines alone, both automotive and non-automotive engines. Non-auto engines contribute to almost one third of our engine volume today, and it's coming at almost the same level of profitability as auto engines, right? So the diversification between auto engines to auto plus non-auto was the first step of diversification. Then the second stage is also growing, to your point, in multi-brand retail, which was spares and service, and now the AutoEVmart, which we believe, and I would like to get your feedback as well. We believe while the concept of multi-brand retail is not new world over, it's been around, but in India, in EV and in electric vehicles, the time has come that multi-brand retail will play a very important role. And so we believe that's the right step there. So that's another area. Third is electric mobility, to your point, two-wheeler, three-wheeler. Going forward, where do I see the revenue? So the engines business, less than 40%, that will continue, right? Just that the mix will change. Diesel can become diesel plus CNG, auto will become auto plus non-auto. That's kind of the transition we are seeing in that vertical. In the other two verticals, Greaves Retail, which is the spares plus the service plus the multi-brand, I think that has enormous legs of growth, enormous legs, right? And it's also a very profitable business. Third leg is obviously the e-mobility, and like you rightfully said, that's the two-wheeler, the e-rickshaw, the three-wheeler, and the market is just beginning to take off. So we believe the transition from 4 or 5 years ago, where we were a 70% B2B company, to today we are a 60% B2C company, right? That was by a strategic mantra where we said we wanted to be a B2B plus B2C. We wanted to get closer to the consumer and we wanted to extract life cycle value. And when you look at the three boxes, and oh, by the way, we have two enabler platforms, which are smaller businesses, which is Greaves Finance and Greaves Technologies, which are enabling the e-mobility, right? It kind of fits with that strategy.
How much have you leveraged your balance sheet? How much of your cash you have burned so far, and how is the promoters taking it? How easy it was to convince the promoters, board members to take this plunge, or did this come from the promoters themselves? How did it happen?
No, I must admit, tremendous support and leading from the front, from the both the promoters and the board. As you know, we have a very capable, independent directors-led board. Also, in addition to the promoter, of course, who's the chairman. Very strong support that we need to change before the market changes us, and we need to be ahead of the curve, right? So I think very strong support. We could not have done it without the board support, right? And the promoters were absolutely leading from the front in terms of that this is the future is changing, we need to change along with it.
My another question on your balance sheet and cash reserves.
Yeah, I'll address that. Yeah. So thanks to that, obviously, all the investment so far, the Ampere is a 100% subsidiary of Greaves Cotton. So all the investment, right from the time that we have bought the company to the recent manufacturing capex to some of the product development efforts, have all been funded by the parent company, right? So, and for that, the board again has been a very, very strong supporter. Obviously, we have done the right thing. So, what we have done is on our traditional businesses, we have synergized the plants. We have taken the 5+ plants that we had, synergized it to one location in Aurangabad mega site, right? And we have got rid of unnecessary or asset surplus, land, etc., and put that into the business. So we have kind of done that, and at the right time, and we have said this openly, we are open for bringing in the right financial partner to drive our next generation of growth into Ampere.
So you're looking at investors also.
We will be, yes, yes, at the right
What
time we
kind
will
of
be.
growth, what kind of investment plan you expect in the next 5 years, and what kind of revenue do you expect from this new vertical that you are building in the EV electric mobility value chain?
Yeah. So Nabil, I've given you a lot of numbers until now, but one thing as a listed company I cannot give you is future-looking numbers. However, I'll give you some guidance, right? So if you look at the growth curve, if you look at the opportunity size, and if you look at the percentages of how things are evolving in electric mobility, right? I think the numbers are there to see. The potential is there, right? In terms of investment itself, clearly we have said in terms of we will do what it takes to invest in both products, capex, people, technology, right? So we will continue to do that. Where the number will be, honestly, let's do the math. Today, the market size of the EV two-wheeler and three-wheeler is minuscule, very small, right? We are a significant player in both two-wheeler and three-wheeler, as you said earlier. The transition is going to happen, and as the transition is happening, I think the switch will happen over the next 4 to 5 years. I think it's sooner than later, right? I think some of our shows have talked about it. And we believe we'll be one of the major beneficiaries because we are a serious player, right? And we are equipping ourselves for it. But I don't want to give a number out here, yeah, from a future guidance.
Any percentage term or anything, just one small guidance that you expect,
As you
or
see,
two
pretty
x,
much.
3x? How do you see?
So let me give you look back and tell you. So every year, if you look at it, right, it was 18 crores when the founders were running it, annual revenue. 18 became 55, 55 became 100, 100 became 200, roughly 200 crores last year. 180 something crores, right? Was the exact amount. So every year we are more than doubling, and I don't think we are in any mood to stop. So I think you hopefully that will give you an idea.
Nagesh, you talked about ethanol, you talked about multi-fuel. We have seen the PLI scheme gives a lot of impetus to hydrogen fuel. You have acquired a lot of company, invested in electric mobility, pure electric, like lithium-ion powered batteries. Do you want to invest in this other fuels that is being talked about? The government just shows that there is a focus on this also. So, will you be open to invest in hydrogen fuel startups also? Are you looking at that direction also, or you will stick to this?
Right now, let me start with the PLI question. So we are studying the fine print of the PLI. We believe it's a step in the right direction, especially on the component side. There are opportunities for companies like us. So we are studying that in detail, right? Point number one. Point number two, in terms of the hydrogen or the future technologies, we are always open. But as a company, we also have our limitations in terms of where all we're going to spend money, right? So we already spend money on diesel BS6, or really getting to the BS6 for IC engines, right? And we have done that both on the automotive side and on the non-auto side in the genset, right? So we will, in terms of emission upgrades, so we will continue to watch that market closely. We will continue to work with partners or educational institutions or think tanks, right, like we continue to do. But right now we're watching that segment very carefully, and meanwhile we continue to invest in the electric mobility. So we will have to see how this all evolves. But I'm a firm believer that some of these technologies have a lot of merit when you look at hydrogen and even fuel cells going into the future.
How do you see a lot of unknowns are there in electric vehicle space? We have very less number of vehicles on the streets right now. The real experience or the feedback of the customer is yet to come. Going all out in the EVS space, does it give you any kind of fear also that you are putting your eggs in the right basket or not?
Yeah. So I think it's a great question. And that's why if you look at our strategy, it was always an and strategy, right? We said in IC engines, it was diesel plus CNG plus electric, going into electric. Then we also said retail. And retail, we were very clear, multi-brand for a company like us, which was B2B 5 years ago. Multi-brand spares first. We tested the market, couple of thousand retailers, now going to 7,000 retailers. We have access to 12,000 mechanics. Then we got into multi-brand service, where we service. Pre-COVID, we were doing 15 to 20,000 customers a month, monthly people coming in to service their vehicles through our outlets, right? And then multi-brand retail, which we touched upon earlier, right? So we believe that's another diversification. And the third, so I don't think, Nabil, we are putting all of our eggs in one basket. In fact, if anything else, I believe we have three opportunities. One is the traditional IC, which is auto plus non-auto. One is the retail, and third is the e-mobility.
We'll talk about the multi-brand, but before that, let me bring in Roy. He has been a two-wheeler veteran, and he is now leading your Ampere electric
Yes.
vehicle two-wheeler unit. And just want to understand how his experience been different after spending decades in ICE engine two-wheelers. Roy, how are you dealing with this new age technology electric vehicles? What's exciting? What's you think you're missing from your traditional experience that you had with ICE two wheelers?
Can you hear me? Thank you very
Yes.
much.
Yeah.
Yeah, thank you very much for hosting me here, along with my MD and CEO. And well, I can say, Nabil, I'm seeing you after those Yamaha days, after 2 years or so. And here, it's like every day is exciting. Trust me, every day is so exciting because uh, what what we've been doing is like an IC engine in that field. We've been there for almost decades. It's like some improvisation of technology here and there, but this is a very new thing, and we all know that it's a rising sun, rising industry, and we have a lot to do here, and every day is a learning, and we are making ourselves very strong in terms of our technology and the customer understanding. Well, I heard that you started the discussion saying that you have we will have to see how customers are going to experience the electric vehicles, and we'll be taking their feedback later on. But Nabil, I must say that no, we have more than some 1 lakh electric vehicles from Ampere, which is already running in the market on roads. And we are very closely, as watching them, talking to customers, understanding the requirements, understanding the improvisation points, all that. So it's a great learning. Thank you, Nabil, for asking this question.
Nagesh, one more question. Just want to understand, working in a traditional company like Yamaha, you told traditional ICE engine two-wheeler company to completely electric vehicle startup setup. Do you regret that you probably got a bit late, or you think you're at the right time at the right place, or any learning that you are trying to carry forward from your previous stint at this new that is helping you, if you could share for your counterparts also.
No, no, I must say I'm at the right time at the right place.
Okay.
Because, yeah, prior to this, would I, wouldn't, I would have been like too early for this industry. And if it was like a little bit delayed, I would have been late. That's the right time.
And how is it different selling electric two-wheelers compared to ICE two-wheelers? You have sold ICE two-wheelers for a long time. Now you are selling electric two-wheelers. Uh, what are the challenges you are facing, or what makes it easy for people to adopt to electric two-wheeler as a sales and marketing expert? Now you are looking after operations also, but to the core, you have been into sales and marketing. Just want to understand your feedback on that.
Nabil, frankly speaking, we have not even started. We are just making ourselves ready, and market is there. People are showing a lot of interest to us on us, and we are just before taking that big leap, we are just trying to understand customers, trying to give them what they want, and we have not even started as far as selling is concerned. Sales will start very soon. Very soon we'll be getting into that phase, but it's not even started. In I see what kind of numbers we see and what is the potential, and I see a lot of potential in electric vehicles. People are going to shift here. It's like Nagesh mentioned about belly of the market. We are going to operate in that space, belly of the market, and we are seeing after the fuel price increased from 70, 80 now to 100, 105, 110 and all, there are people who are interested in, and they are looking at electric as an option, first option, and that is the place or space where we are looking at, and we are making our strategies around that.
Thank you, Roy. Nagesh, you mentioned about you have a plan to expand, and that you think that will be scaled up with the help of investors. How close are you in terms of reaching a deal there, and how soon we can hear something? Because time now to take the lead.
So two parts I thought. One was on the plant, another was one of the investment, right? I think you had a two-part question, right? Yeah. So on the plant, I think we've said we will be ready by the end of the fiscal year. I think thanks to our wonderful team, they're working very hard to be there sooner. So stay tuned. I think we will be coming and doing production out of the Ranipet plant sooner than we had announced. So I think things are progressing well as we speak. Roy's team is bringing in people and training them and getting ready. So I'll leave it at that. In terms of the investment, like I said, we are very clear that thanks to our board and to our promoter, the investments have come in from the group, right? If the right partner comes along, right, who shares our vision and who is willing to go for this ride with us, I think we'll be very open. I won't put a timeline for that. We are in no hurry. But at the end of the day, if the right partner comes along and there is a meeting of the minds, I would say, why not?
Nagesh, you have got into some space which has been, bone of contention for a long time. As an OEM, as a dealer, you have seen the market. Both of you, Nagesh and Roy Kurian. Multi-brand was one of the things that was not at all accepted in Indian markets. How are you going to, expand this business, or how are you going to make this model acceptable in India? Do you think electric vehicle gives you that liberty? What changes in the electric particular space that you thought that this could be well accepted? You were part of Fiat. You saw the multi-brand Tata Fiat did not reap any yield any success also, and you saw there has been always noise about going multi-brand with obvious reasons because of the increasing real estate cost, increasing manpower cost, and that could be adjusted if you have a multi-brand retail. That was pitched by FADA dealers for many years now. Now you have finally taken a plunge. How does it change with just change in the fuel?
I will take the intro, but I really want Roy to comment, given his years of experience in this field, right? I Multi-brand is not new, right? As you all know, multi-brand is very common in Europe and other parts of the world, right? And even within India, if you look at retail, right? I mean, look at retail industry, multi-brand is very common. For some reason, I think in the auto industry, you're right. And thanks for reminding me of some of my past. Some places it hasn't worked. But I also believe the time has come. When you look at a new technology, and if you really look at EV, it's really a gadget on wheels or a tablet on wheels. It's also closer to a consumer product than a traditional IC engine vehicle, right? And we believe the consumer preferences are changing too. When I look at our customers, whether they're Gen Z or the millennials, 40% of our customers today are first time buyers to two wheelers. They do a lot of research online and then they come to them. So uh, when you combine the what we call the digital experience, which is online search combined with the physical assurance and the physical, we believe the time has come, and we believe this is the right time. And the beauty of this is it's a one-stop shop. In our first multi-brand outlet in Bangalore. Today we sell electric bicycle, which is probably 20,000 rupees to all the way to a 4 lakh product, right? So the consumer has choices. He or she also has financing, insurance, accessories, other stuff, which makes it a one-stop shop. Roy, over to you.
Yeah, you covered it nicely, Nagesh. I would second that. And only thing is, I can say one more thing, Nabil here, that we compare this EV industry with, it's like it's automobile, but it's more like mobile. Things are things are like, the way people buy mobile, and they want to have choices in the showrooms, and we wanted to try this format. That is the reason we started this, and we believe our survey and our reading is to an extent true, because after seeing the response what we got from Bangalore or EVmart, we can see traction happening there. People are coming, they want to have choices, and they just compare mobile, just like, it's plug and play, right? You just charge it, take it home, charge it, or use it, and then constantly, like 2 years, 3 years after that, go for a new one. This is the trend which is going
So,
to
Roy,
happen now.
will
In
the
automobile.
Ampere outlets sell Hero electric bikes also?
So we our doors are open for all. That's what we are thinking. But we will not say no to any brand. And so, Nabil, what I was saying is, like, old days are gone, where people used to buy a motorcycle or a scooter, where people used to buy and say, okay, this will last for generations. Now those days are on. Now people want to move on. So they would like to see what is the best available model and what is the price point, comparison, feature study, fabbing, and all. And then they would decide. That's what we discussed. We thought that this is going to be a trigger point why people would shift to this kind of a buying model. And that's the reason this EV Automat has come out. Yeah.
And
Thank you, Roy. Yeah,
Nabil,
Nagesh.
if I can just add to what Roy was saying, I think Ashim, you touched upon that earlier. I think it's also the ecosystem play. And let me elaborate on that a little bit more. Right. By going to a one stop shop, you have access to multiple products, multiple brands, charging infrastructure, where again, we are taking the fast follower approach. We have not invested in the infra side yet. Having said that, though, someday in the future we can talk about it more. But right, because our focus currently is how to drive mass mobility in EV, right? And if offering financing through Greaves Finance or through our partners. We have partnerships across. Uh, how do we offer accessories? And over the life cycle of the customer, can I keep that customer? Bring them into the showroom, give them a product, then continue the life cycle experience, right? So in that sense, look at it as an ecosystem play. And then someday in the future, hopefully I'll get to service or replace the spares and hopefully get to give them a replacement vehicle. So that's kind of the thought process.
Thank you, Nagesh. Roy, before I start taking questions from the audience, I'll bring in Ashim here. And Ashim, you can pose your questions if you have any, and your remark on the changes or the transition that Nagesh and Korean, Roy Korean has just pointed out. Your
Yeah, I
views.
think, yeah, sure. So I think the transition is rightly pointed out. It is happening at various levels, including, the kind of customer profile and what they're saying. So I think the analogy to the mobile phone, that you want to go to one place and you want to try out all the products and make your choice, it's clearly there, and more so with the electric vehicles. I would just ask a question slightly on the manufacturing side, because say Greaves has been making engines and also components for a fairly long time. And we see that in EVs, still a lot of EV components are not being made in India. So, what's your sort of plan on that? Talking about the electronics components that go into the EVs, and maybe later on, even say at a cell level manufacturing for the batteries that are going in. Have you drawn up any plans to that effect?
So I think, Ashim, it's a work in progress, and I'll tell you why. Currently, our focus is on getting the consumer uh, buy into this technology, ramp up, right? Get the volume first, right? So clearly, the scale. This business is about a scale business, right? So we are committed, and we are working with most of the Indian suppliers, right? 2 years ago, I must admit, I couldn't convince a lot of the bigger automotive OE suppliers to come work because of the volume, right? That
Right.
situation is rapidly changing. I'm very thankful for that, right? Very rapidly changing. Same thing with financing. That situation is rapidly changing. So clearly, we have a very good engineering team. The engineering team understands the duty cycle of the vehicle. And by the way, we haven't talked, Nabil, about B2B, both B2C and B2B customer, because the B2B customer requires application specific engineered products, right? So when you look at all of that, the next phase, to your point, Ashim, is clearly the component where, like you've always said, Greaves has always been known for the manufacturing and the supply chain. We get that, and it's going to be for us a natural transition. It's going to be a combination of scale. What do I make? What do I buy? Right. And just like
Right.
we did in IC engines, I wasn't making everything with IC engine side either. Right. I used to make and buy. So
Right.
similarly, our strategy will be which parts of the value chain we want to keep it in house, which parts we want to do. So that's the entire thought process going.
Got it. Got it. Right.
Ashim, do you see Indian auto industry or mobility industry is in for a mega shift when it comes to retailing and services? Because look at people like Ampere or Greaves, they are trying to get into multi-brand showrooms. You see, the Mercedes has changed their way of retailing their vehicles. We see Tesla coming up, certain they will adopt the similar model that is there in the US. How do you see the retail industry changing with this?
Right. So I think, Nabil, I would sort of dissect that at two levels. There are the incumbents that have a very widely spread out retail and service network, and that remains a key strength for them. And they will continue to leverage it as a single brand network of theirs. Right. Now, let's come to the other set of companies. That could be the startups, the EV, even the new companies that are coming in with IC engine vehicles. Right. We've seen the trend with many OEMs that a vehicle comes, it sells a lot of numbers, and then it kind of plateaus out. One of the reasons for that is because the new showrooms that you set up at the service centers come up in the key cities. And so you sell a lot of numbers there, and after that, you plateau out. I think even the traditional players are realizing that when they're coming into India, in order to increase their reach, they are making the tie ups, right? And for example, Peugeot has done recently and others. So I think going forward, increasingly there will be this sort of contrast to the market. The traditional players with a very strong network continuing to leverage that, and on the other hand, we're going to have this multi-brand retail play out, multi-brand vehicle servicing play out. Also, in terms of spares, independent chains coming up and keeping your spares across the country. And more so, I think EV would lead the revolution in this, because many of the players out there in the market today don't have a sizable footprint, and the ones that I have, in order to get viability out of this network, maybe a multi-brand strategy is going to be the way forward.
I just want to understand from you, gentlemen. We have seen the dealer partners, dealer principals seems to be a bit nervous at large scale. Their profitability is shrinking because of the obvious operational cost efficiency is not there. Will you be open to invest in any of these, traditional dealer partners or DPs, dealer principals trying to get into this multi-brand space? Will you look at collaborating with them, or what would be your message to these traditional dealer principals? Starting with you, Nagesh.
Yeah, so I would like Roy to start first on this
Oh,
aspect, and then I'll come back. Yeah, Roy, go ahead.
okay,
Okay.
go ahead.
Okay, Nabil. See, we are open for this kind of offer and this kind of a proposition, but it's too early right now. We have opened one showroom right now, right? It's in Bangalore, and you know that we are EV is still 3% of the total two-wheeler market, right? So we would like to see and observe very carefully before we ask a dealer to invest money in that. So we would like to first of all see how's the response and what can be the ROI, how big or small the showroom should be. So it's the first outlet for us. So for us, it's going to be a very too early for make a comment on this. But hopefully, after some months, few months, if you call back, and maybe Nagesh will answer you, because by then we would be having some answer ready with us. So right now, it's a
Wait
learning
and watch.
thing. Yeah,
Yeah.
yeah. Wait and watch.
Nabil, I think he covered it. At the end of the day,
Okay.
we are very excited. Initial response has been fantastic, and the customer who are coming in are a different sort of customers who are coming in, right? So, and we are obviously very cognizant of the fact that the Ampere exclusive showrooms where they operate, what is that, right? How to protect them and this, right? So there is a separation. Strategically, there are a lot of elements in play. We are going to manage this very, very carefully. Because keep in mind, Ampere's goal is they're already in 400 towns, tier one, tier two, tier three. We need to reach the masses, especially given our where we play, right? This is a very different concept, and it will probably play in a lot of different type of cities, and it will be well separated from Ampere. So I want to leave all my dealer friends with no worry, because there will be separation. There will be we'll think it through, and we'll make sure that we ramp it up, and we believe the time has come. We believe the time has come, and it's also the right thing from a viability and the future of the mobility industry.
Ashim, your quick thoughts for the dealer partners.
Yeah, I think so. Dealer partners, I think both Nagesh and Roy already touched upon that. I think what we've seen of late is, yeah, dealer partners have had this, feeling around some OEMs coming in and exiting. For example, Ford exited recently, Chevrolet happened in the past. So, yeah, from that perspective, I think you can hedge your bets if you go in for a multi-brand retail. So I think, so maybe, dealer partners will start looking at, either I go with somebody who's already very strong, or I also have a tendency to take up something which is multi-brand. So I think that's what the dealer. So there'll be more openness, I think, from the dealer partners side also to try this out, and also from the OEM side, because it's after all a give and take between the dealer partner and the OEM. You need to find people who are ready to take that up on the other side as well.
So let me take a few questions because we have only 7 minutes left. I'll take this question from Sunil. He wants to understand how do you, as the population of electric vehicles increase, obviously, decomposing of lithium-ion battery will be a challenge. So how do you see the recycling industry, battery recycling industry? Do you have any plan to invest there, or how do you want to go to this part of the EV value chain, Nagesh?
Yeah, so this is clearly an important thing, that recyclability of the battery, second life of the battery. And we are already seeing that in our e-rickshaw market, and that's where we have tremendous learnings, because the battery on the lead acid side gets to be replaced very frequently, right? So this is a very key point, Nabil, but honestly we as an industry need to solve it right now. So we're watching that very closely. We are learning from our consumers, whether it's on the e-rickshaw or on the two-wheeler, right, as to how often they change it. And trust me, I think there is going to be a lot of developments in this area. Also be open to see some business model innovation also, where battery could be offered as a service, battery could be taken out of the equation. So we believe this entire equation, which is this battery recycling, second life of the battery, is a very prominent area right now. By the way, we don't play in that. We are not in that.
Roy, how do you see the feedback of the rural market when it comes to electric two-wheelers? That's another question coming from viewer.
Nabil, I saw that question. Somebody was asking about rural. Yeah. So India is all about rural, Nabil. 70% of look at the place, and we have more than 6 lakh villages, and that is where people live, right? And when we talk about value of the market, we see the lower middle class and middle class people. But you know, if you look at the total two-wheeler industry, I personally feel it comes from, look at the pyramid, starting from affluent to rich to middle class, that area. That is, these are the people who are really, really buying two wheelers. But if you look at the bottom of the pyramid, which is a big chunk, people are not even buying two wheelers because it's not the buying, the purchase or the buying, the initial payment what he's going to make. It's the recurring expense which he's going to pay, he's going to incur. That is what bothers him. That is the reason we have a market which is limited to say 18, 20 million. You never know. I'm expecting there's going to be explosion, right? Exploded growth maybe can be expected in future, because many people can not really buy, but also the total cost of ownership is going down. So rural, it will be a big chunk, is what I believe in future moving forward. May not be right now, but in couple of years from now, you'll see major traction coming from rural as well.
We have seen India is the largest or has been the largest two-wheeler manufacturer. We manufactured over 24 million two-wheelers at the peak year. Now it has come down substantially. Just want to understand with EV two-wheelers, do you expect India to be a hub for entry-level electric two-wheeler manufacturing? We can export a good amount of two-wheeler also there. Ashim and Nagesh, yeah, Roy, you can.
I strongly believe this is going to be the hub for electric mobility. We will export to many countries from here, and there are going to be many
How
players coming in and doing it.
when do
Yeah.
you expect we can do it? Even if we do not have the key raw material like cell manufacturing, we do not have lithium, we do not have adequate cobalt, we do not have adequate nickel. So how do you think we can become competitive enough to export when the markets like China, Taiwan is already taking a lead there?
Okay. See, for so many years we were at less than 1% as an industry. We have come to immediately we come to 3%. We are gradually moving to 5%, 10%. I don't see in next 2, 3 years why the industry is not going to be 10%. When the business volume grows to this level, you automatically see the investment and more lot of traction happening in this field. So all these things is not a rocket science. People can make, yeah, it is an expensive. Having a cell manufacturing industry will cost you $1 billion. And that is not somebody who can do it just like that. It requires some investment, but sooner or later it will happen. So that is the only constraint I see. Otherwise, other technology parts, I think we are going to be a very good center. We have a lot of good examples in front of us, having good technical, tech-based products coming out, and it is going to improvise only. And definitely, it is going to be one of the, see, the efficiency is what we have in terms of cost, in terms of manpower. I don't think many countries in the world would be able to match that. So that scale will come, is what I believe. Nagesh, to you.
Thank you.
No, I think you covered it. You covered it. I think we now need to start scaling up. And in terms of the lithium cells, I see right now, that's one of the things that at least short term there is no answer, but hopefully in the near future we will get there, and things like PLI and others will probably be an enabler for that.
Yeah,
And
just to
Ashim,
add,
your
sorry, Nabil, just to add, I think, you should also throw into the mix India's frugal engineering capabilities, which have shown tremendous potential in the ICE side. I think those are also going to be in good stead when we talk about global competitiveness. And to solve some of the raw material issues, I think with the number of consumer devices also that we are consuming, I think urban mining is going to take off somewhere in the future. And, that's when we will try to also get a lot of those raw materials locally. So I think not having raw materials cannot be, a big constraint towards being able to manufacture for the globe. Yeah.
Thank you, Ashim. Thank you, Nagesh and Roy, for joining ET Auto Startup Adda Station for Innovation. And this was indeed an interesting discussion. I think the viewer had a lot to take back and think it over when they are trying to get strategic change in their market, be it the traditional player or they are the startup in this space. Thank you so much once again for joining ET Auto Startup Adda. See
Thank
you
you.
on
Thank
next
you.
Tuesday with another experts and founders. Thank you so much once again.
Thanks, Nabil.
Thank you
Thanks.
so much.
Thank
Thank
you.
you all.
Thank you, everyone. Thank you.
Thank you. Thanks.